Joining us now, O'Leary Ventures Chairman Kevin O'Leary. Kevin, good to see you. You just heard what Lydia said. I'm all for people getting pay raises, but you're talking about 48% pay increase for UPS part-time workers, 40% potentially for United pilots. You add that up, Kevin, that sounds like more inflation to come, maybe a second wind. How do you read it?
Exactly. That's exactly the problem. It's going to show up in core inflation. Let's just take a couple of those cases that Lydia detailed. That's a very good shopping list of millions and millions of employees in aggregate across multiple sectors. But let's focus in on that UPS settlement. UPS settled at around $50 an hour for their driver. The other big side of that equation are FedEx contractors. They're not unionized. They get paid about $26 an hour. Now, how's that going to resolve itself? I don't see any upside other than more inflation, because at the end of the day, the pressure from the contractors on FedEx who are not on strike, but they're just looking at this disparity on the payment and saying, wait a sec, I got to get more, and they will go after more. That will be inflationary as well. The yellow strike around trucking, that has nothing to do with the union, actually. That is a case of idiot management at a trucking company. And you can tell that's the case because the valuations of the other trucking companies, after they notified everybody they're going to go bankrupt about 48 hours ago, have gone up in value. All of those routes, all of those drivers will be picked up because the economy's moved direct to consumer. And they're kind of like the Silicon Valley of the trucking business. And it's a good thing that this management team's been wiped out, because they're not very good at what they did, and they burned through $700 million of my and your money in PPP aid and other aid during the crisis of the pandemic. So they really wasted a lot of money. And culling idiot management out of the economy is a good thing. But you are 100% correct. We're going to see further rate hikes by the Fed as a result of what's happening here.
It's interesting. We're looking at shares of Yellow, which went from maybe 71 cents to $1.23. But I'm curious if you think that it's because they can try to get out of some of these union negotiations if they do file, because for so long people didn't have wage increases and there was no inflation. I come from that generation where for the last 10 years, you never got a wage increase until COVID, and then the power came back to the worker. Is this a company that can now get out of that power to the worker?
That's going to be very difficult. And frankly, this management team is probably unfinanceable. No private sector player, investor like me is ever going to back those guys. They were terrible at what they did. So you've got to flush the board, you've got to flush the management, and you've got to actually break away from the union. That's really hard to do. You and I will be talking about this same story in 2 years. Nothing's going to happen there. They're going to lose all their employees too. It's probably just a piece of coal, and that's okay. The market will absorb it. I don't worry about that. But as an entity, I think it's completely valueless.
Hey, Kevin, I want to get your thoughts on ESG. Elon Musk recently using some really strong words to slam ESG during a Twitter Spaces conversation with presidential candidate Vivek Ramaswamy. Listen to this.
I'm very pro-environment. You know, it's hard to get more pro-environment than me. But like we just don't like we don't want basically some sort of like bizarre like communism rebranded thing, which is like a lot of what ESG is, and to be inflicted upon corporate America without the knowledge of the actual shareholders, which is what's going on. And so I'm saying the public is being lied to by they're being lied to.
Kevin, Musk even went so far as to say these big investment companies could be setting themselves up for class action lawsuits from investors. I wonder what your take is.
So what he's hinting at there, and this is a really interesting debate that's just bubbling to the surface now. A lot of congressmen and women are exploring this idea of proxy services. There's only 2 large proxy service companies in America that have, it's a duopoly, that have about 90% share of the market. So they're completely opaque in trying to provide any information. They don't give you the reasons they vote for ESG mandates or not. So they provide the voting services, they make the recommendations, and they're very pro-ESG without telling you what's in it they're pro about. You have no idea. So what Elon's really getting at is saying, wait a second, if you're a BlackRock or a Fidelity or somebody else and you're using one of these proxy services where 80 or 90% of your and my money in 401ks and savings accounts is harbored, I don't have a say in what ESG is. Tesla itself got delisted out of an index on the S&P as a non-ESG company, and my goodness, it's an EV company, and nobody can explain why that happened. So now we have a situation where we need to shine the light on ESG, and that's making a lot of these proxy companies, the two big ones, very uncomfortable because they make billions in fees. They're not accountable to anybody, and all of a sudden, you and I are talking about this issue, and the Congress is coming after them. I say, great, let's shine the light of transparency on these companies. There's no reason we shouldn't be doing that, and let's get some competition. Let's get a third and fourth proxy company that provides transparency. But ESG is a big deal, and now it's bubbling up as an issue.
You make a good case that these proxy companies have a monopoly or duopoly in the market. But the Federal Trade Commission, I don't think they've gone after them. They have, though, gone after a lot of other companies, Kevin. You've seen this. Lena Khan's at the helm. She is an acolyte of Elizabeth Warren. I think the whole FTC setup right now is a backdoor way to give the government more control over American capitalism. But I'm really eager to hear what you have to say about it.
Well, that is an interesting narrative, but it's actually causing change in where money's being managed. You think about places like Oklahoma, North Dakota, West Virginia, Texas. Some of these states have simply thrown out their money managers because they can't get any transparency. They can't get it from the money manager themselves, and they can't get it from the proxy service. So all that's happening here is, as an oil-rich state like Texas is saying, wait a second, they're putting up their hands saying, you're not going to manage my money if you can't tell me how you're deciding and how you're voting on proxy regarding ESG. And so now we've got Congress getting involved. It's never good news when you're a monopoly or an oligopoly when you get a call from your friendly congressman, because you know somebody's putting together a committee, and you're going to be testifying soon. And you know what I say? Great. Let's shine transparency on these proxy companies. I'm putting my hand up, too, as an investor, saying, why can't you disclose the information? What are you hiding from us? Bring it out. Let's go.
Well, we appreciate that you come here on this program and help remind us to bring it out. Kevin, thank you so much for your time and perspective.